Okay, so the Fed slashed interest rates by a half a point to their baseline borrowing rate, yet Treasury yields have been moving higher. Now, some experts interpret the Fed's focus on supporting the softening labor market as an admission that they're willing to tolerate a little higher inflation than normal. Now, of course, us in the mortgage space, we already know how this whole thing works, right? So if you're not in the mortgage space, just remember, oftentimes when you hear that the Fed has cut rates, mortgage rates will actually go up. Treasuries will actually go up. It's like the market has already factored in what the Fed is going to do, so when the cut comes and it's not bigger than expected, well, rates will tend to go up. So just make sure you have that conversation with your clients the next time the Fed's cut rates.
Check out this Fed graph of monthly supply of new homes in the blue and new previously owned housing units under construction in the red. Love this line by EffectiveNet453 from Reddit when he said history may not repeat itself, but it certainly rhymes.
Again, it's like poetry, so if they rhyme.
Now follow this closely because it's kind of cool. In May of 2007, we had 7.8 months supply of new homes and 1,164,000 homes under construction. Then the Fed cut rates by 50 basis points. And remember, that was 2007. Now, in August 2024, we have the same 7.8 months of supply of new homes, similar 1.509 million homes under construction, and what happens? The Fed cuts rates by another 50 basis points in the same September, but this time 17 years later in 2024. So the question we should be asking ourselves right now is, what happened in the following years after the Fed cut rates in 2007? Well, if you believe this metric to be the standard bearer, then one might think we could be in for a couple of really hard years. Now follow the show today because I talk about this with my personal business. Those happen to be my best years. It doesn't have to be our worst, even if this is right.
Did you know that the median down payment for a house in the U.S. is a whopping $64,000, or 15.36% of the median priced home of $416,700? Home buyers aged 25 to 33 rely heavily on gift funds for their down payment. Here, by the way, is the down payment by state. Of course, the darker the orange, the higher the down payment, and the lighter the color, the lower the down payment. I mean, look at the contrast. In California, the average down payment is $153,000, and in Mississippi, it's only $8,000. It's a good time to move to Mississippi.
Now, a bright spot today, that damn hurricane is over. Lots of homes were blown away. Inventory across the country of new spec homes is the highest it's been since 2009. Sales, they just jumped. Get this, inventory of completed houses jumped by 46% year over year and by 200% since mid-2021 to 104,000 homes in August. And that's the highest since November in 2009. And this is according to Census Bureau data. But remember, as a loan officer or a real estate agent, working with these spec builders, especially with a company like Truly, it pays you and they get the greatest rates, the most liberal underwriting, and relationship-based lending. And all you have to do is make the connection. Spec builders, man, they've been good for us. And finally, some more good news. Frankly, I think this is great news. And getting back to the beginning of the show, the housing market is seeing its biggest logjam of inventory since before the pandemic. And all I can say is this, I hope it increases. You have to understand, we can't control prices. We can't control rates. We really can't control anything for that matter, except our ability to compel people to buy homes. And with the rates down and inventory up, we simply have more opportunities to choose from. We simply have more opportunities to choose from now than we have in the past. And like I said before, my best years were posted after the 2007 timeframe that I alluded to earlier in the show. See, you have to get this. You guys can create your own market, your own reality, and it's easier to do with more inventory. Trust me on that one. Hope this helps. Listen, guys, before you price your DSCR loans, it is the fastest growing portion of the mortgage market. Make sure you talk to Oak Tree first. They actually have better rates than our A-paper lenders. Trust me, I've been pricing this stuff out.